Welcome back to Roxham TV. I'm your host, Jemmy. We've got another packed show today, and honestly, the theme is really clear. The world is shifting, and it's shifting fast. Oil air prices are breaking, AI is replacing jobs and entering the military. Trading is being handed over to machines, and crypto is still growing, but not without risk. So today is not just a market update, it's a full picture of where money, technology, and power are heading. First, we'll start with the oil situation, and of course, this is a big one. The UAE is leaving OPEC after more than 60 years. This is not just a policy change. This is a signal that the global oil system is starting to fracture. We'll break down why the UAE is walking away, what this means for Saudi Arabia, and why this could weaken OPEC in the long run. Then we move into AI, and the impact is already here. Nearly 100,000 tech workers have been laid off this year. Companies like Meta, Microsoft, and Blog are cutting roles and replacing them with AI. But at the same time, AI companies are still hiring humans. So we're going to talk about what jobs are actually disappearing and what roles might survive. Next, we go deeper into AI, but this time from a different angle. Google has signed a classified deal with the Pentagon. This allows the US government to use its AI models for military purposes. So we're talking about mission planning, analysis, even targeting. This is where AI stops being just a product and becomes a geopolitical tool. After that, we shift in markets because AI is now trading too. So Gemini just launched agentic trading, meaning AI can now monitor markets and execute that trades for you automatically on your behalf. No clicking, no watching charts, just set the rules and let it run. So we'll break down what this actually means and more importantly, where are the risks. Then we'll move into crypto, specifically tokenization. So pre-IPO investing is now being brought to retail users through crypto exchanges. So companies like SpaceX now are being accessible through tokenized format. Sounds very exciting, but we'll explain what you are really buying and why this is not as simple as it looks. After that, we look at one of the biggest names in tech, so being Nvidia just hit a new time high. But here's the twist. It's actually underperforming the rest of the chip sector. And somehow that's making Wall Street even more bullish on Nvidia. We'll explain why. Then we go back to Bitcoin, but this time from a different angle. Tether just launched a Bitcoin faucet, giving users a small amount of BTC directly through their wallet. It sounds very simple, but the signal is much bigger. This is about onboarding millions of new users into Bitcoin, not through speculation, but through actual access. So today's show, we are connecting all the dots. So we are diving into energy, AI, governance, markets, and of course, Bitcoin. These are not isolated dots. They are not isolated stories. They are all part of the same transition, being old systems to a new one. So, all right, there's a lot to get into. Let's get straight into the first story. We'll start with oil. The UAE is leaving OPEC and why this could be the beginning of something much bigger. So, the UAE literally just announced last night here in Hong Kong time that they are officially leaving OPEC after more than 60 years. This takes effect on 1st of May. So, there are only a few days left, 2 days left. And this is not just another headline. This is a structural shift into the global oil system. So what just happened is that the UAE has decided to exit OPEC completely, and after being part of the group since 1960s. And the reason is actually really simple. They simply want to produce more oil. Right now, they're producing about 3.4 million barrels per day, but the target is 5 million barrels per day by 2027. And under OPEC rules, that is simply not allowed because OPEC sets production limits to control prices. So the UAE made a choice, which is like either stay in the system or they could grow. And they chose the latter, so they want growth. Timing wise is very important, like timing matters here. This is happening during a major disruption involving Iran. The conflict has already removed a huge amount of oil supply from the world, so global supply is already tight. And instead of staying coordinated with OPEC, the UAE is stepping in and going fully independent. And that's why this move hits market harder than usual. So speaking of oil price, for Brent crude oil, we are skyrocketing yet again. So that was a very volatile move. So on 17th of April, which is just like last week or 2 weeks ago, we were sitting at like only, I'll say only, that sounds crazy, but like we were sitting at $90 per barrel. But right now we are skyrocketing again, so $112 per barrel. Now, let's talk about all the impact, and especially when it comes to OPEC members. And I do want to dive into Saudi Arabia because just looking at this chart, one thing you notice is that Saudi Arabia sitting on the top. This is, of course, the oil production within the OPEC members. This is where it gets very political. So Saudi Arabia is basically the leader of OPEC. And for years, they have been in disagreement between Saudi Arabia and the UAE, mainly about production quotas. The UAE has been investing heavily to increase capacity, but OPEC, of course, led by Saudi Arabia, has been holding that back. So this exit by the UAE is not sudden at all. This is the result of long-term friction. And here's another key. The UAE doesn't rely on oil the same way that they used to, because for years they have been spending a lot of money on finance, on tourism, on technology. So oil, of course, is still very important for the UAE, but is no longer the only pillar that changes everything. Because if you don't depend fully on oil revenue, you don't need OPEC to stabilize prices. What you want is a flexibility instead. And there's also a political layer here. UAE officials recently said, so here's the headline. So they say Iran can't be trusted. We are not fools. That's literally what they said. And the reason why, if we take a look at this graph, Iranian missile and drone attacks. So UAE is sitting at number one. So of course, the UAE is not going to believe a word coming out from the Iranian officials. So UAE officials say they don't believe. Now, just like think about, so if we connect the dots here from this news that happened days ago, so 20th of April. So if we connect the dot and think about it, like Iran is part of OPEC, and now the UAE is leaving the same group. So this move is not just about oil, it's also about positioning. They are choosing independence, so both economically and politically. Because if we go back to the chart, like Iran is actually the second biggest member when it comes to OPEC, so producing 4.7 million a day, barrel per day back in 2025. So it does matter. Like short term wise, the UAE, of course, is just like underneath Iran, is a third biggest player in the OPEC space. And short-term wise, of course, the impact is here. It's being reflected on the oil price as well, because like supplies is already constrained by the global conflict. But long-term wise, this is where things get serious. Like once the market stabilizes, the UAE can increase production without any limits. That means more supply, which also mean could apply more pressure on oil prices. So perhaps the real risk is not on everyday people in the long run, okay? But OPEC members are taking the hit more than us retail do, because OPEC only works if members cooperate. Once a major player leaves, that system starts to weaken. And if others follow, then you don't just have one exit, you have fragmentation. So the bottom line about this news, like the UAE is leaving OPEC, that is a done deal to take over on its own production. What the UAE want is flexibility, and they also want growth, and they don't want to be limited anymore. So this may look like one country making a decision, but it could be the start of a bigger shift. Because when one major player walks away from the system, others start asking if they should do the same. So as this development goes. So, okay, moving on, I do want to talk about AI because like AI is taking your jobs, a lot of jobs in the open market these days. So let me just give it straight to you guys. So I do have some data. So nearly 100,000 tech workers have been laid off in 2026. And the same reason just keep popping up, like because of AI. So if we take a look at this list at companies cutting jobs, citing AI. So Meta announced a 10% workforce reduction, Amazon, Oracle, Snap, Block. So the list go on. And the pattern is quite clear. Like they are replacing certain roles with AI systems. And the clearest signal actually came from Jack Dorsey. So after major layoffs at Block, he basically said like AI can now do more, so fewer people are needed. That is absolutely no sugar coat whatsoever. So if we take a look and dive into the roles that are being cut, you'll notice a pattern because like a lot of these job cuts, they are in engineering, they are in support roles, operations, and even some creative work. Anywhere that can be automated or scaled or assisted by AI. Like companies, they are not just cutting costs, they are restructuring from people-driven work to AI-assisted systems. But at the very same time, something very interesting is that Anthropic, they are hiring. And of course, if you've been watching Roxham TV, you know Anthropic being a really big tech player in AI world. And the role that they are hiring, they're not hiring engineers and they're not hiring AI researchers. They are actually hiring event leads. So in other words, like what people do at this job, event leads, they are simply bringing people together. They are hosting events and talking to users and really building up that relationships. In other words speaking, human connection. That's what they're seeking for at Anthropic. So think about that contrast. On one side, we have AI replacing jobs. No doubt, we know that already. On the other side, AI companies hiring humans to interact with humans. Because like AI is no doubt very smart. Indeed, a lot smarter compared to most of the human being on Earth, I would say. Like AI can write, can code and analyze data, but it still struggles with reading the room, building that trust with another human being and real human connection. Like every company is telling you AI will replace jobs, and that's true. But at the same time, they are still hiring people for the same things that AI can't replace. So this is not contradiction. This is actually a signal. The future of work is not humans versus AI. It's like what humans are still needed for. So the bottom line is like AI is cutting jobs. We know that already. But the roles that survive will be the ones that require presence, trust, human interaction. So final thoughts like event leads, it might sound very simple, but they tell you something deeper. In a world run by AI, being human being looks like it still matters. All right, so that was definitely very interesting news. We'll take a short break from here. When we come back, we are diving into another big AI job being Google. They pulled another shocking move because they just signed a deal, AI deal with the Pentagon. And there happened to be a lot of negative feedback. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxome. 11.5%. 11.5%.
Welcome back to Roxham TV, and thanks for sticking around with us after the break. So we get straight into this. Google has just signed a classified AI agreement with the Pentagon, and the key detail is this. The US government can now use Google's AI for any lawful government purpose. So this is not just for research, in other words speaking. This would include mission planning. It also include military analysis and potentially weapons targeting. So we are not talking about consumer AI anymore. This is AI being integrated directly into military systems. Now, here's the key part people are focusing on. As part of the deal, Google has agreed to adjust its AI models, meaning they would have to adjust the safety setting, filters and limitations can all be modified at the government's request. Because normally AI companies set their own rules. They decide what the model can do, what it cannot do, and in what case, in this case. But in this case, like those controls can be changed externally. And this is not just Google. Other companies are already in this space. So OpenAI and XAI both signed some deal with Pentagon. They are also working with the government on the AI system. So we are seeing this as a trend where AI companies becoming defense contractors. Now, inside Google, not everyone agrees with this move. So if we take a look at this headline, so 600 employees, actually more than 600 employees, signed an open letter to the CEO Sundar Pichai. They warn that this technology should not be used for classified military operations. They raise concerns about ethics, about control, and long-term consequences. But despite that, Google CEO still signed the deal anyway, so the direction is clear. Google is moving forward. Now, officially, the contract includes some restrictions, like it says the AI should not be used for mass surveillance or autonomous weapons without human oversight. So that sounds reassuring, I guess. In the same contract, it also says Google has no right to veto any lawful government use. So what does lawful government use mean, right? So on one side, we have that guidelines. On the other side, there is no enforcement power. So what does that mean, right? If you ask me, Jeremy, why are you saying this? It means if the government decides something is lawful, Google cannot stop it. So the real control sits with the government, not the company. Now, if we zoom out, because this is a real story, AI is no longer just a tech product, it's become a strategic asset, it's also becoming a military tool and geopolitical advantage. We are moving from AI as a software to AI as infrastructure, and now AI as national security. And let's be honest, every AI company talks about safety, every AI company talks about being responsible, but when governments get involved, power shifts because at the end of the day, if the government wants to use that technology, they will. But there is one company that basically give a finger to the government and also to the Pentagon, that being Anthropic. And this is one of the most successful, I don't want to say it's marketing campaign, but because of this news, they gain a lot of new users because they simply say no to the government. While all these companies, all these tech giants like Google, like XAI, like OpenAI, they gave in to the government. So props to Claude, the LM model from Anthropic. So final thought, this is not just Google, it's about where AI is heading. Because the governments building the most powerful models are no longer just competing in the market, they are becoming part of the system. And once that happens, there's no going back. Also, speaking of AI, it's not just the government using AI and being integrated into the military system. There's also another use case that is emerging. We are talking about AI helping you to trade and earning that money automatically while you are asleep. So that means you don't need to click any buttons. You don't need to watch any charts like I do on a daily basis. No constant watching, and the AI just does it for you while you relax, while you getting some sleep, or while you're watching Netflix. So what just happened is Gemini just launched something called agentic trading. So in simple terms, you connect an AI like ChatGPT or Claude directly to your trading account. And that AI doesn't just give you advice, it actually trades for you. Because for LLMs like Claude or ChatGPT, most of us would just like type some command, type some prompt, and then the AI would give us the answer. For I still, as a human being, I still have to follow those instructions the LM, the AI gave me to push that buttons. But when it comes to agentic AI, they do everything for you. So that's the core idea. Right now, you can set rules like maybe buy Bitcoin when price drops or sell when it hits a certain target. And AI would actually watch that for you on your behalf 24/7. And the AI will monitor, will decide, and execute trades in real time. So there is absolutely no human involved in the process. Now, to be fair, the idea has been around. Like big firms like Citadel and others, they have been using automated trading for years, whether it's algo trade, algorithms, data models, AI systems. That's how they make money. But here's the difference when it comes to Google Gemini. So before, this was only for professionals. Now it's being given to everyone. And Gemini is not alone. There are other platforms. So platforms like Alpaca or Quant Connect or Numer AI, they are all building tools like this. And one interesting dynamic is that if you go to YouTube right now, you will see all these thumbnail titles. They are extremely clickbaity. For example, here he turned $400 into $2.5 million using AI, no coding required. This is what we saw. And we keep seeing titles like this. It sounds really, really crazy. But anyways, if we go back to reality checks, so there is a lot of clickbaity stuff on YouTube. But let's go back to the real world. Like some of these, of course, real, like especially when it comes to small strategies like arbitrage, they still manage to make money using AI. But most of them, it doesn't sound as easy as they are trying to portray. And obviously, if you go to YouTube, a lot of clickbaity stuff. That's how they get the engagement and get the views, right? The real change here, I would say, is access. Like tools that used to need coding or money and infrastructure now become just a few buttons that you click and connect and run on your behalf. So that is a massive shift. But what's the trade-off here, right? We also have to look at both sides of the story. So if we slow down for a sec, because like I do notice when it comes to AI trading, a lot of people get wrecked. Because think about it, you're giving control to an AI model, also a crypto exchange or any exchange, and also an API. That's a lot of trust involved. Things can still go wrong, like maybe bugs or wrong trades, system errors or security issues. And remember, AI does not guarantee profit. And this is what I learned from my professional trader friends, because I have a lot of friends who are in professional trading. And from what I heard from their own experience is that AI trading, most often than not, they are losing money because the strategies simply do not work. And let's be clear, like this is of course a very powerful technology, but it doesn't remove the risk. It just changes where the risk is. And there's one more important point. Like, even if the AI works, even if you make money, if your assets stay on an exchange, you don't really control them. AI trading is here, it's faster, it's easier, more accessible, yada, 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 and we know that. But also more complex, more dependent, and still very risky. So, but bottom line is like use the tools if you want, but don't forget the basics. Trading is one thing, ownership is another. So simply not your keys, not your crypto. All right, so speaking of trading, now I want to get into one of the biggest IPOs in history. Of course, we are talking about SpaceX. Why we're talking about it yet again? Because I believe we talk about it on Roxham. But right now, we are seeing a trend. So crypto exchanges are now letting you to buy pre-IPO shares as tokens. And when it comes to a really hypey company like SpaceX, it happens to get a lot of attention from people. So we're diving into SpaceX, like stuff that used to be completely locked away from normal investors, and now all of a sudden it's on crypto exchanges. So that sounds exciting. So what happened is like platforms like Binance, BitGet, Gate.io, they all have launched tokenized pre-IPO products. Same idea across all of them is that they would take private company shares, wrap them up into tokens, and sell them to retail. So instead of needing millions of dollars, you can buy just a small piece of that. So if you guys don't know what a pre-IPO is, there's a simplified version here. Like pre-IPO basically mean you are buying shares before the company goes public. Normally, this is only for institutions or funds or ultra high net worth individuals. And when it comes to the minimum investment, it sounds very scary because you need a big check, usually at least $10 million or more. So for us retail people, we're not even in the room. So now we have crypto, now we have tokenization. Instead of selling a whole chunk, that these platforms, these crypto exchanges, they would break it into pieces, tokenize it, and distribute it globally. So now you don't need a big check like $10 million. You just need an account. And that is very disruptive. And however, I do want to get into the details about these trades because I feel like a lot of people still don't understand the risk involved. And you are not directly owning any of these shares because like here we have different lists like pre-stocks, tokens, SpaceX, of course, being the number one. Another really hot one is OpenAI and Anthropic, Kalshi, Polymarket, like all these familiar names and being the hottest in 2026 so far. So, however, most of the time, for these pre-IPO, you're buying exposure through something called SPV, which is a middle structure. So you don't sit on the company cap table, you hold a layer above it, and there are still rules applied. Even if the company IPOs, you usually cannot sell immediately. There's something called a lockup period. So typically 6 months. Again, it depends on the company that you're investing. So even if price goes up, you are still stuck. But personally, I'm not denying tokenization. I love the idea of tokenization. I think this is something very groundbreaking shift for us retails, especially because we are seeing RWA being applied for not just pre-IPO, maybe other assets as well. For example, gold, oil, stocks, all moving on chain. And of course, the benefit for tokenization is that us retail will be able to trade 24/7 and we have global access. And this is a very undervalued statement, like having that global access. Like here in Hong Kong, we're very fortunate we can trade most of the markets, like global markets, but not every part of the world can just invest into the US stocks so freely or invest into other markets. So having that flexibility using that RWA and tokenization technology, it actually helps a lot of people globally. And pre-IPO is just a piece of that. It's just the latest piece, one of the benefits of RWA that offers. So the demand's so high, especially for SpaceX and all these like Anthropic, because like these companies are growing really fast. And of course, when it comes to SpaceX, is highly dependent on Elon Musk, and he does have a massive following, the biggest following on Earth. So it makes sense. And I happen to be an Elon fan as well. So whatever he's touching, I do believe it will turn into gold. Not financial advice, of course. But historically speaking, like each funding round increased valuation. So early investors would benefit, of course. But let's be very clear, this is not guaranteed profit. We have seen cases like WeWork collapsing, companies doing down rounds, valuation dropping 50% or more. So yes, like some of these companies would go up, but some would go to zero. Now, here's where it gets messy. Like in traditional IPO deals, there are layers of brokers. Like each layer adds additional fees on top. So some take like 1% and it'll go up to 3% and 5%. So by the time it reaches you, the price is already marked up. And what's even worse is that a lot of deals in this market are not even real. Like some shares listed multiple times, different brokers selling the same thing. So in other words, there isn't real liquidity. Like real liquidity is often less than 10%. And this is the core issue we have, which is liquidity. Like pre-IPO is not liquid. Like you can't just exit anytime. You either wait for the IPO, which can take years, or find another buyer manually. So even if you are up on paper, you might not be able to sell. So let's just call it what it is. Like they are turning illiquid private assets into tradable tokens for retail. That's powerful, but also very risky. And remember, I know a lot of viewers watching Roxham TV and Gemini Crypto, you guys are, you do have a crypto background, but this is not like trading altcoins. You're not supposed to flip quickly or trade the hype and chase the next momentum. This is, I would say, closer to long-term venture investing. You're looking at these products and you are asking these questions like, okay, I'm seeing SpaceX or SpaceX and Anthropic. Like you're asking yourself these questions like, will these companies still be around in the long run? Do I believe in the roadmap and what these companies would promise would actually deliver in the long run? Is the structure safe? Who is issuing it? Who is responsible if something breaks? Because once you buy in, you might be holding for years. So that's the risk we have to know. And I feel like a lot of retails, we just simply don't know enough how the structure works. So if we zoom out, this is much bigger than just like a SpaceX going pre-IPO, going IPO and buying their pre-IPO tokens. We are moving into a system where everything becomes tokenized. And the stack looks like this. So stable coins maybe for the settlement, blockchains for infrastructure, exchanges for distribution, and service providers for asset issuance. So let's be honest, like this is still a huge unlock for us retail. I'm not denying the benefits of RWA and tokenization. assets that didn't exist for us before now is possible. But access doesn't mean advantage. The bottom line is pre-IPO tokenization gives you early access, but also less liquidity, more complexity, and more hidden risk. So final thought, this is not the next quick flip. You not remember, guys, you're not flipping some altcoins or NFTs. This is more like venture investing, repackaged for crypto. And if you treat it like meme trading, then you're going to learn the lesson the hard way. All right, so that is the quick update for the pre-IPO situation. We'll take a short break from here. When we come back, we are diving into more basically the popular stocks we have right now, being Nvidia hitting a all-time high yet again. But Wall Street seems to think they are still cheap and is still a good entry price for Nvidia. We'll take a short break from here, but when we come back, I'll offer you my honest take whether I think Nvidia there's more growth room for Nvidia to do. So do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxum. One currency, one place.
Oh, I forgot to mention, dividends on Roxome are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxum. 11.5%. 11.5%.
Welcome back to Roxum TV, and thanks for sticking around with us after the break. So we are now doing another deep dive on the next, I would say, the most popular stock in the market right now, being Nvidia, of course, because Nvidia literally just hit another new all-time high. Of course, it sounds really bullish on paper, but here's the twist. It's actually underperforming the rest of the chip sector. And that's exactly why Wall Street is getting more bullish. So interesting dynamic. So let me give you some figure why I would say Nvidia is actually underperforming. So when it comes to year to date, it looks really strong. So we are at the end of April this year in 2026. So year to date is up 12%, so 12.8%. That is really good. Like consider Nvidia being the most valuable company around the whole world. So $5.1 trillion market cap. And so if we go back to the stock, it's up 12.8%. So that is really good performance. But however, let me give you some perspective, because when we are comparing the AI sector, it makes sense to compare with like other companies, like other semiconductor companies, what they're doing. However, if we take a look at the broader semiconductor index, you will notice like why Nvidia is lagging behind. So year to date, Nvidia is up 12.8%, but like for the broader index, year to date is actually close to 40%. So that is a huge gap between the broader semiconductor, the whole industry, and Nvidia. Some rankings even show Nvidia near the bottom of semiconductor performance in the past few months. So normally underperformance, because again, that's a huge gap, right? Underperformance normally it means something very bad. That means like Wall Street is not eyeing on Nvidia anymore. But here's how institutions see it. If the whole sector is so strong and Nvidia is the king, is number one, right now somehow is lagging, that means there's some catching up for Nvidia to do. In simple terms, money hasn't really rotated into Nvidia yet. So now if we think about it and if we actually connect those dots, nothing has changed on the demand side of Nvidia. AI, guess what, is still exploding. We know that already because we have been talking about AI nonstop for the previous months in Roxham TV. And Nvidia is still the main supplier of AI GPUs. Analysts do expect that there will be multi-year growth for the company, for Nvidia, driven by data sectors, driven by, of course, AI infrastructure. And big tech companies are still buying. And when it comes to customers of Nvidia, guess what? They are all big tech companies. And more importantly speaking, when this big tech are doing business with Nvidia, they are talking about multiple years, locking in that contract, locking in supply years ahead. So it's not just like short-term demand for Nvidia, what I'm saying. We are talking about demand visibility into 2027. Nvidia's pipeline across new architectures like Blackwell is estimated in the multi-trillion-dollar range. That's not short-term hype, that's long-term demand. Right now, the market is still being driven by other names as well. So there's no doubt when it comes to semiconductor, like why we have this whole index in the first place, right? So there's still other competition. Intel had a really strong earnings surprise. AMD is also catching momentum. So capital is spreading across the semiconductor sector, not just concentrated in Nvidia. Now, here's something interesting. Wall Street is starting to look at Nvidia differently, not as a growth company, but as a cash machine. Because right now, Nvidia pays nothing in dividends. Like yield is basically zero, much lower than other companies like Apple or Microsoft. So what the analysts are saying is that what if Nvidia, just think about it, if Nvidia increase those dividend or expand share buybacks, it could attract a whole new class of investors like income-focused funds or institutional capital. Right now, Nvidia is a growth story, no doubt. If we zoom out to a maximum, you can see like a all-time for the all-time graph is actually up 532,000%. So it's actually higher growth than Bitcoin if we zoom out to a certain time frame. But it could also be growth income and growth plus income. So it's not just a growth story anymore. That combination usually leads to even higher valuations. And I know it sounds really insane, like given that Nvidia is literally the most valuable companies around the whole world. The market cap is $5.1 trillion. But like if like analysts are saying, and they are making very aggressive projections, talking about Nvidia potentially reaching $10 trillion market cap by 2030. And I don't know about they changing the dividends, but like judging from the AI world, and because we are doing research around AI every single day here on Roxham TV, so at 2x from here, I think it's doable. Like people are really bullish. Basically, the reason why they're bullish, including myself, because I don't see Nvidia as just a company. I see it as an entire AI infrastructure, almost like an industry by itself. Like short term, everything depends on big tech. So Nvidia's customers like Amazon, Meta, Microsoft, Alphabet, that means Google, they are all reporting earnings this week. So everyone is eyeing onto these like big tech companies. So it's going to be a very important week in tech because like they are Nvidia's biggest customers. If they have increased AI spending, like of course that is really bullish. If they are cutting spending in AI, that will be bearish, but like I don't see the trend from happening anytime soon. So this week, in other words, it will be very critical. Bottom line is Nvidia just hit another all-time high, but it's still lagging the sector. And that lag, that divergence is exactly why Wall Street thinks it can go higher. Final thought, like this story hasn't changed yet. It hasn't changed anything. Like AI demand is still there. Orders are locked in. And now there's new angle. If Nvidia starts returning those cash, it doesn't just stay as a growth stock. It becomes a capital magnet. So that's why we're paying attention here on Roxham TV. All right, so let's shift gears a little bit. I do want to dive into Bitcoin. One very good news is that Tether is now putting Bitcoin directly into users' hands. So not through trading, not through speculation, but through a faucet. So what just happened is the Tether CEO, he just announced a live Bitcoin faucet. It's built into the new Tether wallet, and here's how it works. You download the app, you engage on X, and you can claim small amounts of BTC delivered over the Lightning Network. Simple as that. Now, if you've been in Bitcoin for a while, that of course it sounds very familiar because back in the early days of Bitcoin, faucets were everywhere. They gave away small amounts of BTC for free. The goal is, of course, to onboard new users and teach people how Bitcoin works. And that's what Coinbase has been doing back in the days as well. So what Tether is doing right now is bringing that idea back, but at a much bigger scale. Because like Bitcoin is literally like $2 trillion market cap, if I remember that correctly. Let me quickly check on CoinGecko, and we will look at the Bitcoin price in a bit. So okay, sorry. So $1.5 trillion market cap is still really big compared to the early days of Bitcoin, when Coinbase was giving out free Bitcoin to users who sign up to the exchange, right? So back then, faucets were really small. It's just like it's not even Coinbase. Like random websites were doing it, limited reach. But right now, we are talking about Tether doing it. So Tether, they have their own wallet, own wallet. So not sure if I can see the interface. So there you go. So that's Tether.wallet, one of the biggest distribution networks in crypto. And according to them, the wallet could reach over 570 million users globally. So this is not just a feature, this is a distribution strategy. This faucet is just one part of a bigger move. So Tether recently launched its new wallet, as I just talked about, and the positioning is very clear. So how the CEO calls it is the people's wallet. I don't know about that name. It sounds like a Chinese wallet, but here's what they're trying to build. So they're trying to build a self-custody by default. Also a Bitcoin on-chain plus Lightning networks. Of course, stable coins will be involved because we are talking about Tether at the end of the day. And there's even gold exposure all inside one app. And importantly, they are focusing on that simplicity because like I haven't used it myself yet, but like looking at the whole UI UX, it does look like it's very simple to follow. Even my mom can do so, and she's not a tech savvy person whatsoever by all means. And like things like gasless transfers and cleaner UX and less technical friction. So even non-crypto users can get started, and that matters a lot. And this faucet, of course, itself, it sounds very small. You're not gonna get rich from it. It's not back in the days when Coinbase was doing it, when Bitcoin was worth nothing. Right now, like the growth when it comes to Bitcoin, of course, is going to be limited compared to the early days. But that's not the point. The signal is what matters, because Tether is not just pushing stablecoins anymore. They are actively onboarding users into Bitcoin rails. So think about it. Tether already dominates stablecoins. Now they are using that distribution to introduce users to Bitcoin. That is a massive shift we are noticing, because stablecoins are easy, but Bitcoin requires the users some sort of understanding of how Bitcoin works, self-custody, and new behavior. And this is how you bridge that gap. So we are having that simple onboarding from Tether, and also, of course, the massive distribution from Tether as well. So that's why I'm very excited for this this campaign. So do sign up if you guys have the time and test it out. And let me know if you like the whole UI UX. But anyways, that's pretty much all I want to cover in today's content. So before you go, make sure to give us a follow on X. So my Twitter is jamcrypto_io. Make sure to follow Roxum TV as well, because we have all the updates about the global news, about AI, about, of course, Bitcoin. Right now, like Michael Saylor is at some event talking at some panel. So point being, there is so much valuable content you probably do not want to miss out. So do give us a follow on Roxum TV on X. Make sure to subscribe on both channels if you haven't already. As always, I'm live here Monday through Friday, starting at 3 a.m. Eastern Time. If you don't manage to catch my shows live, don't worry, the recorded version is also available on both channels, so being Jam Crypto YouTube channel and also Roxum TV YouTube channel. Thank you guys for watching, and I'll see you guys in tomorrow's show.